What's up, everybody? It's your boy, Shake Chatterjee, and you are tuning in to another episode of Life is Blurry. Today, we have none other than Jeremy Schneider, who is a personal finance expert. And if you don't believe me, listen to this. He retired at age 36. I got 3 years to go, less than 3 years to go. You got to help me out, Jeremy. We're gonna be getting into this today. He is well known for the personal finance club that he's started. He's been a part of a few different companies, but he, more than anything else, forged his own way and kind of grabbed success by the horns. And I respect the hell out of that, Jeremy. Let's start with something to put you directly on the spot. If you could attribute your success to one thing, what would it be?
Oh man, that's a big question. Hi, Shake, by the way. I don't know. When I get that kind of big question, I usually fall back on saying two things. One is persistence. It's one of my favorite sayings is overnight success takes a decade. And so when you see people who are very successful, it's not just because like 2 weeks ago they decide to like start day trading or something. It's like they've been building something for years, and then 10 years later, it kind of starts to reveal itself. And the other one is continuous improvement. If you are persistent and then you improve every day along the way, just a little tiny thing, just like one thing each day, 10 years later, you're going to be a long way. And it's really at the beginning of that journey, it feels very daunting, but just like any long journey, it's like one step at a time.
Oh, absolutely. No, that makes perfect sense. I mean, it's a total fallacy to think, you can get rich quick overnight or, any of those things. But just so people have a better understanding of your journey, would you mind kind of walking us through what got you to where you are today?
Yeah, the short story is in college, I was studying computer science. I turned down a job offer from Microsoft. I decided to start my own internet company. I grew that for about 12 years, and then I sold it at the age of 34 for $5 million. My share after taxes was like $2 million. And then 2 years later, after working, I decided to retire at the age of 36 with like $2.5 or $3 million. And then since then, I haven't really had a job. I've just basically been investing my money in index funds. And now my net worth is about $4.5 million. So despite not having a job, just investing, I continue to be worth more, which is nice. And now I basically do what my hobby is, which is financial literacy. I help people learn about money and investing. I don't know why some people really like kite surfing or going on reality TV shows. I like helping people learn about money.
Well, you can do all three. I feel like
all three,
right,
maybe.
right. But that's your real passion. Like you really enjoy helping people. What would be your advice for somebody who's just starting out? I mean, it's very impressive that you retired at such an early age. Me being 3 years out, it's like, wow, it's too late for me. Do you feel like it's ever too late?
No, I mean, just today, every single day of my life, someone asks me, is it too late for me? And sometimes, once I had a 23-year-old ask that, and then I had to reach through my phone and punch him in the face because he's like a literal infant child.
I wish I was 23 right now.
What are you, 33?
I'm 33, yeah.
I mean, that's still a baby. So like,
okay.
Your adult life started, like 10 years ago or something? Maybe not even if you give kids after college a few buffer years. So like, I like to think 25 is a start. So you're like 8 years in. And then when's your life going to end? If you look at the actuarial tables, like you probably have 50 more years of life. So you're like 8 out of 58 right now. You're like at the very beginning.
Okay.
So yeah, see, how are your finances, by the way? Are you going to retire at 36?
It doesn't look that way. It doesn't look that way. Being a veterinarian is a noble path. It's not a path anybody goes down for money. I'll say that right now. I think it's always interesting when people say like, you're in it for the money. And I'm like, what money? Like it is actually, I mean, no offense to any, like diehard, like vet med is the best type of people out there listening, but like it is a very, very, very poor return on investment going into veterinary school. And it's an honor that I get to do what I do. It's a privilege that I get to help animals, be a voice for the voiceless. But as a veterinarian, we have to be smart about our investments, and we have to be, clever. And it's not the same as, becoming an orthopedic surgeon and like you're just kind of you're kind of set. My
I
finances
might
are
disagree with that
okay.
though.
Okay,
I
tell me
might
why.
just well, because I think doctors are notoriously bad with money. And I think smart people, vets, doctors, whatever, have this like trouble delineating where their expertise ends. And at your line of work, or if you're an orthopedic surgeon or whatever, you are like deferred to on a daily basis. People look to you as the expert in the field. And I think that people who are constantly in that position think that when then it comes to something that's not directly in their area of expertise, like how to manage their money, they should also just automatically like know what to do, or maybe they're afraid to ask or try to learn or whatever. And so doctors are notoriously bad investors. And I think having a high income doesn't necessarily mean you're set. I mean, you can make
No.
$500,000 a year, and if you spend $600,000 a year because you're going into debt, you're just cripplingly broke for your whole career, right?
I
And so
spend half
even
my paycheck at Nobu. It's not a good thing. It's not a good
I
thing. I
heard you
gotta
had
be more careful.
reservations.
Yeah.
So you say they're good. How has your finances changed? Like, I mean, I'm on this podcast before. I've heard the other episodes, so apologies if you guys have covered any of this. But like, has the show impacted that? You're still a full time vet. Are you trying to like move? I mean, we're on a podcast. Is that affecting
Yeah.
your finances?
Yeah. Well, I'll put it to you this way. So, we kind of touched on this, and there's going to be a whole episode dedicated to this. But being a vet is a very demanding job, physically and emotionally. It's heartbreaking a lot of the
Yeah,
time, and
yeah,
it can be really tough to sustain that for long periods of time. It takes its toll on you. So with everything happening with the show and just these new opportunities becoming available to me, I've decided to take a break from being a vet.
okay,
Not to say that I wouldn't go back, but I think I owe it to myself. I mean, to be in the situation I'm in is a luxury. I've set myself up fairly well financially. I'd love to get your take on it, maybe off the air, so I'm not divulging all my details
come
here.
on,
But
transparency. I'll tell you. I'll show you mine if you show me yours.
yeah, you go first.
I would
um,
happy to.
lucky to be in the situation I'm in, where I can kind of take a pause um, and do some more passion projects for the time being. The podcast has been fun. It's not profitable yet. This is, we're early in, but
Right.
like you said, most great things take time, and it's nice to be able to take that time and build things up. I have been smart in one way in my life, and that's been in investing in real estate. And
Nice.
I'm no real estate mogul, but um, thankfully, because of some carefully thought out investments, I'm able to do what I want to do for a period and see where things go.
Nice. I mean, I have two rules of building wealth. Rule number one is to live below your means, and rule number two is to invest early and often. And it seems very basic, but the world is full of very, very broke people because they don't do that. And a lot of
Right.
people, I think, if you just are walking around in pop culture, you see like people winning the lottery or crypto traders or like all this like crazy stuff or GameStop and all this like speculation. And people think, oh, I should be like getting in the game and gambling or whatever, but that's not how rich people get rich. They get rich like you, and you were modest about like you bought real estate. And I'm gonna guess you've held it for a long time. Like, how long have you held your oldest property?
I bought that the year I graduated vet school, so 2014.
Okay, so that's 8 years, right? And so
Mhm.
an 8 year holding period isn't gambling. It's not guessing. It's just buying an asset, renting it out, letting it do its work over time. If you can go on to the next one, go on to the next one. That's how like when I meet someone who's worth like 10 or 20 million bucks, they have a story that started like yours, like 28, I bought a duplex, or I lived in half and rented out the other half, and then 2 years later I bought the next one. Then 3 years later I bought a fourplex. And then when they're 50, they have 30 units that are all worth $500,000 each or whatever, and they're loaded.
Yeah, yeah. I mean, I definitely, going through the experience I'm going through now, I appreciate the real estate even more. And it's overall a pretty safe bet. I know we had that downturn, but I'm very thankful that I did what I did. One thing I wish I wasn't doing as much though. I could definitely be living more within my means, you know. Um I yeah, I got caught up in kind of this like downtown Chicago lifestyle, and it doesn't happen overnight, It's like a little bit every day, and then before you know it, it's like, "Oh my gosh, I definitely need to take a step back."
When you look back at your life and you think about the happiest times of your life, like what do you think about? Is it when you were spending the most money? Is it experiences? Like what types of times do you remember as being the happiest?
It's definitely the experiences. It's definitely the experiences, and sometimes that coincides with spending the money, and sometimes it doesn't. So, um,
Yeah, I found like I kind of became rich overnight. Before I sold my company, I was making $36,000 a year. I was the lowest paid employee in my company. I was paying everyone else more so I could grow the company, and then I suddenly had $2 million in the bank and growing.
wow,
And there was actually a period of time when I shook hands on the sale price of my company, and then when like the wire cleared, and that was like 3 or 4 months. And so it was kind of like a anxious time, but it gave me this like time to basically run all the thought experiments of like, what am I going to do with this money? I'm like, I have $2 million. I mean, that was a ton. I mean, maybe these days it doesn't sound as much money with inflation or whatever, but like, I was living on $36,000 a year in San Diego, and so it's like I have
for
$2 million. I
sure.
could walk into a store and buy whatever I want. I was like, I could go buy a Ferrari. A Ferrari. What does a Ferrari cost? A couple hundred grand. Like it's still 1.8 million left, right? And I was like, what would I do with a Ferrari? Like park it in front of my house, like drive around. I'd look like a douchebag. And so like, but that time gave me just an opportunity to like have this time to sit with it. And I realized that like none of that actually, I don't think would make me any happier. Right. And I think
Mhm.
what does make people happier, and I think you kind of referenced this earlier, is like freedom with your time and choices. Not like, for example, if you didn't have the freedom that you have now to take a breather from debt or from being a vet, sorry, and you were just forced to work 6-hour days and 12-hour shifts or whatever the nightmare schedule is. And I totally believe like the sympathy fatigue or whatever it's called, like where you're just like, it's so
Yeah,
hard to
compassion
see.
fatigue.
Yeah,
Yeah.
compassion. I walked animals at the or walked dogs at the shelter for a couple years, and after 2 years of it, I was just like, dude, the dogs never stop. They all need homes.
Yeah.
Um, but but having freedom to step away from that, having freedom to spend your time as you see fit, spend the time with the people you see fit. I think that's what really brings happiness, not like buying stuff.
That's true, man. I mean, I'm taking this break right now and like still figuring things out, and it's exciting. It's an exciting time. That freedom is a huge component. And a lot of times you don't realize how much pressure you're putting on yourself in a certain situation until you take a step away from it. So I'm
Yeah.
definitely enjoying that. But one thing you said, so you were living in San Diego on 36 grand a year. Tell me about that. Like what was your like living situation like? Like, how'd you like what'd you eat for lunch? Was it like a ramen cup of noodles situation, or what was it?
Yeah, I think everyone has this perspective based on wherever their finances are. Like if someone is making 50,000 a year, like, oh, if I made 60,000 a year, I'd be sad. Or someone's making 100, they're like, how could you possibly live on 70? It's so very like a matter of perspective or relative. And so I don't know. I had a roommate. It was a 2-bedroom apartment. We were paying like $2,000, so my rent was $1,000. Um, my credit card bill was like $1,000, which covered like food. I went to the grocery store mostly. When I ate out, it was very cheap. I was driving a '99 Ford Explorer. I paid cash for it, no car payment. I just didn't spend much money, and it was fine. And I played beach volleyball. It's still what I do for like my primary hobby. And no one looked at me as poor or anything when I was like on the same beaches as all the rich people. I was, who cares what car was parked in the lot? No one gives a shit if I was driving a '99 Ford Explorer. Still, like when I take girls on dates, we like drove to Baja California. It was great. And so I just feel like there's, yeah, like if I had doubled my expenses, I don't think my life would have been happier.
Right. No, that's great. I mean, there is a freedom that comes with that, like kind of, just what I need to survive type of mentality. There's no fakeness to it. You're not showing off to anybody, and you're gonna attract genuine people that way, right? If you're driving that Ferrari around, it's like, why are they with you? Is it for you or the Ferrari type of
I
thing?
don't even know. So, people have asked me, like, since I have money, do I attract that sort of person? And I just think that, like, it's so contrary to my personality. People like girls who like money would not like me. Like, I talk about frugality. I like wear free T-shirts. I drive a Mazda now, so I had to buy a new car when my Ford broke down. But now it's a 6-year-old Mazda. It's great though. It still looks and drives fine. And so, but yeah, I don't. If I was trying to attract girls with money, I don't even know what I'd do. I don't think it would work.
Yeah, definitely not a place you wanna be when you're trying to flex like that. Well, since you are the personal finance expert, I must ask, like, where do you like to invest, and what criteria do you use to determine that?
Basically, so one of my big things is separating investing from speculating. And I
Okay.
think new people to this space see speculation out in the world, like gambling on GameStop stock or stock picking in general, or buying and selling crypto, or every sort of incantation of guessing what's going to happen next. Is inflation going to go up and down? Are we going to get in or out of the market due to a crash? All that stuff is not investing. It's speculating. It's guessing what's going to happen next. And the nature of these free markets in the world we live in is that it's gambling, because no one knows what's going to happen next.
Mhm.
Investing, on the other hand, is doing what you did. It's buying an asset, sitting with it for a long period of time, and letting the asset do its work. And basically, the two assets I would buy are the stock market in the form of index funds and investment real estate, to be
Mhm.
differentiated from your primary home, which is not an investment, it's an expense because you live in it. So
Mm.
that's what I buy. And personally, I mostly do index funds just because it's a lot less work than real estate. And so I have a Fidelity account. All my money's in there. I clicked buy on a few index funds. I did that in 2015. Now it's 2022. So for 7 years, they've been sitting there. They've doubled in value or so. So my 2 million became 4 million, which is how I am where I am. And that's what happens every 7 years or so. The stock market doubles in value. And one study I did is, if you go back and look at the history of the stock market from the early 1900s to today, there's no 40-year period in which investing $250 a month doesn't turn into $1 million. So this doesn't need to be an opportunity only for the rich. It's just people. And you said, how to live on 36,000? Well, ask the person who makes 30,000 how they did it, right? And they have 6,000
Right.
free dollars a year. And so if you can just take $250 a month and just buy an index fund that buys all the stocks in the market, that's what an index fund is, and just sit with it over 40 years, the average final value is $1.9 million. The worst it ever did was like 1.2, and the best ever did was like 3.8. And so there is some variability in there, but $250 a month to millions of dollars is a good deal.
Oh, absolutely. Yeah, there's no question about that. And what do you think about the kind of crypto equivalent of these index funds? Do you believe in that stuff? Do you think it's all hype?
So I would put crypto in the speculation section. And so, for some background, I have a master's in computer science. When I talk to people who have my kind of education, who know the technology inside and out, we're all very unimpressed with crypto. It's just like one of 30 technologies the last decade that are kind of cool and interesting. And this one just seems to have drawn this massive amount of hype and speculation. And you can't certainly argue with the trailing results. Before at least a year ago or so, they had incredible results. But over the last year, it's underperformed the stock market significantly. It's down like 30% or whatever. And so, but that said, I like to encourage people to give themselves permission to take 10% of their portfolio and do whatever they want. So with 90%, buy and hold index funds and real estate, invest, buy for the long term, let that money, work, let those assets build wealth. Now the 10%, yeah, go nuts if you want to buy crypto, if you want to day trade, if you want to do options, if you want to do whatever. But just be prepared that 90 or that 10% could go away. Be honest with yourself if it's actually underperforming, etc. What do you think about crypto?
I think it's exciting. I mean, the blockchain technology, I think, is really cool. How everything is decentralized and documented so accurately. I'm getting into the NFT space too, and the smart contracts that can be built in there. I mean, and that stuff is exciting to me. To be able to track the exchanges of just about everything, and not just the initial transaction, but in the future as things change hands, it's all documented and traceable. And it's cool that say you have an NFT project that does really well, and then that can go on to be resold, and then you're gonna kind of take a small cut of that as well. And
Yeah.
just how the chances of something being counterfeited or something being, forged becomes nearly impossible. And as things go from the real world into the metaverse, I think these sort of concepts become even more important. So, for example, like if you see a painting in the real world, to some degree, doesn't matter if it's real or fake. You're kind of looking at the same thing. I mean, you're enjoying it for what it is. I mean, if somebody told me it's real, I'm going to believe it to be real. But once you're in the metaverse, it matters a lot more, and it can be tracked so much more carefully and verified. And I think as we kind of go from this, real world into, right now we're like dipping our toes in. Before you know it, it's going to be, 1 foot in, 1 foot out, and then who knows where we go from there. I mean, maybe it's going to be like the Matrix one day. Who knows? But those virtual worlds are going to be more and more important. I think that's where, the blockchain technology and all that really is exciting.
Yeah, I agree. I mean, I agree that the technology is probably going to be integrated just like the internet was, just like, but the question is, I mean, at least the investing question is like, what do you do about it? And I still think the beautiful thing about index funds is you're going to own all the technology companies. You're going to own the companies that are making money in the metaverse and blockchain, all that stuff. But you don't
Sure.
have to, I think people think because the technology is going to change, that means it's certainly a good investment. But I feel like when everyone thinks like that, it's too late. That's already been priced into the market. And so then when you invest after the fact, those things are likely to go down in value when they don't quite meet the hype or a different company emerges. And that's the beautiful thing about index funds is you don't have to guess which thing's going to happen. You just own it all.
That makes perfect sense. Yeah, from an investment standpoint, it is a much safer bet. To you have a little piece of everything, like you said, and the 90% strategy, I think makes perfect sense. It's just you see people making these massive gains, and like people get jealous, but that is what's holding a lot of people back and hurting a lot of people, right? Would you
Right.
agree with that?
Yeah,
That
but
hype.
I think, yeah, I would say that's more like seeing someone win the lotto, right? You see people making massive gains, but it's not many people, and it's still very unusual, and it's not repeatable. And so I can see someone win the lottery, but it doesn't mean it's a wise financial decision, right? Someone's going to win, but still, on average, if you play, you're going to be worse off. That's why I still like my 10% rule. It's like, okay, if you want to play the lottery with that 10%, go nuts, but that's still a gamble. Do the thing that works with your 90%.
Well, how do you feel about, like, for example, we talked about real estate. What about real estate in the metaverse? Because that seems to be booming.
I mean, who knows, man? I just think it's so. I mean, I just read a story about how what's Twitter's CEO's or former CEO's name? Jack
Dorsey.
Dorsey. Yeah,
Mm-hmm.
he sold an NFT of his first tweet for like $2 million or something, and then the buyer just resold it, listed it for $48 million, and the highest bid was $280. And so
Yeah, that's
things that
funny.
seem to be booming maybe aren't going to be booming in the future. It's like easy to like, oh man,
Get caught
it
up in
goes
it.
like this. I mean, Beanie Babies in the 2000s, flower bulbs in the Dutch 1800s, or whatever. There's things don't seem to be booming, don't always continue to boom.
Okay, that's fair. I mean, your approach is a very conservative one, and it's one that's worked. I mean, it's definitely, we do look at the metaverse and crypto as ways of getting rich quick in a lot of, in a lot of contexts. So yeah, your approach is the safest. It's probably not the sexiest, if I'm
It's
being
definitely
honest,
not.
and I think that too. But when it comes down to it, your retirement savings doesn't need to be like the sexiest thing. It should be something consistent and reliable. So that makes sense.
I mean, my whole job is just basically screaming from the top of my lungs, be boring. It's like so boring to just be like, nope, you just gotta keep doing the same thing. I wish I could tell you how to like make moves and like make money quick and yada yada, but it's just like I don't believe that's true. And I think that people who, you know, there are people we could have had the same conversation 20 years ago or 30 years ago about whatever the hot thing was then. The guy who was day trading Beanie Babies is now day trading crypto or whatever, and they're still broke, right? But the person who just bought an S&P 500 index fund in 1980 has $5 million. And so, it's that's what's sexy, is making all that money and having like a relatively sure thing.
Yeah.
The other stuff is just is a good way to chase your tail for 30 years.
Totally. And I think that's a wake up call for a lot of people. I mean, I definitely appreciate the reminder hearing it from someone who has been successful with it. One thing I wanted to talk about, the inflation, the, insane inflation that's happening right now. I read somewhere that you have a theory on how war specifically affects inflation. Would you mind weighing in on that?
Yeah, I made a popular post about how the stock market returns are affected by war. And basically, this was true when the Ukraine thing started happening, where people are like, oh, I should get out. There's a recession coming. And if you look at every US involved conflict over the last 100 years and look at the trailing 10 years of the stock market, it does fine. It does what it normally does. It goes up about 10% a year on average. The inflation thing, historically, the inflation, I mean, it's very high right now. It's the highest we've seen since 1981, I think. It's a little bit weird because we had this global pandemic last year, all these supply chain issues. And so then we're kind of having this like rebound effect when, plus the impact of the war, plus all the money that was printed in those stimulus checks. And so I personally think it's going to calm down. I don't think we're going to see like 1970s eras like stagflation for the next decade. In fact, gas prices or oil prices at least already have come down, and gas prices seem to take their time because oil companies like to quickly raise their prices, but not quickly lower them as those things shift. But but the thing is, like, it's still just, we don't know what's going to happen. And so still the wise move is to do the exact same thing we always do, which is live below your means, invest the difference, buy and hold for the long term, keep holding your property, keep adding a few more. When you're you're 33, I'm 41.
Mm-hmm.
So in 8 more years, when you've had 16 years with your property, and if you buy a couple more or something, I would bet anything that your real estate real estate portfolio is going to be much more valuable than whatever the metaverse happens to be at that point.
Okay, well, we'll have to check back in then. But
yeah, well, schedule me.
I hope you're wrong. I hope you're wrong.
2030.
But yeah, exactly. Well, we'll get you back on the pod. Well, okay, this has been good. I mean, it's just there's really no arguing some of these facts. I mean, it's how history's shown itself to be, and it doesn't. There's no clear indication that's going to change. So if I understand correctly, based on your strategy, you're not really spending much time managing your portfolio every day, right? It's pretty much you're just kind of, it's almost on autopilot.
Well, the one of my favorite stories, which may or may not be true, but people repeat it as if it's true all the time, is Fidelity did a study that looked at who are the best performing investors? Like, what are the demographics? Is it men? Is it women? Highly educated, poorly educated, country of origin, whatever, young, old. They found the best performing investors were tied between 2 different types of people: dead people and people who forgot they had an account.
Oh, wow.
Those people outperformed. And so when you say, I don't look at my portfolio much, like, I look at it more than I should, which is, I don't know, once a month or once every couple months. Like, I wish I didn't look, once a year, I think is a good pace, just to like make sure it's still there, make sure the account's in good standing, make sure everything is invested, it's not sitting in cash or something. But for sure, I'm not like making moves like, and we don't need to look back in the future. If you look at, or we have to look back in the past. If you look at 2020, you might remember there was a global pandemic. And if people think this like Ukraine situation is scary, like, remember when like we all had to stay inside for like 2 weeks, and we weren't going to sure if this like airborne virus was going to wipe out all population, and the market was dropping 10% per day. There's, I think 6 times in history there's a stock market circuit breaker where if the market drops 7 or 10% in a day, they stop trading. And this was started in 1987 when we had like the Black Monday. 6 times in history it happened. Once it happened in 1999. 6 times or the other 5 times it happened in March of 2020. That's like how dramatic that crash was. And people were like, get out, make moves, da, 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 da. And like, I literally, you can go look at my Instagram record. It's like a matter of public record. I was like, don't do anything, just hold, don't look at it. It's going to be fine. And then the market finished up in 2020 by about 18%, right?
Yeah. It's
and
insane.
So when this bad thing is happening, we think inflation is going to do this, or we think the war is going to do this, like, just chill, give it a few years, it'll be fine. So yeah, I don't look at it much.
Okay, that's great advice. I think that's going to lend itself to some nice little reels or clips we put together and release on the internet, because it's like these are the 2 things. So very, very good. This has been super Super informative. Tell me a little bit more about the Personal Finance Club and let everyone know where they can find you.
Yeah, it's just my little, I guess it's now a business, but I help people learn about personal finance and investing. Most of the magic happens on Instagram at Personal Finance Club or personalfinanceclub.com. I'm also on TikTok. I'm a walking soundbite, man. That's why I do the thing with the numbers up big by the
Oh,
camera.
we love it. Okay, that's fantastic. Learned a lot here. Wake up call for myself. I'm sure a lot of people will value this information and they'll probably change their plan a little bit. I would love to have you back on the show another time. Something we could do maybe is even people call in and ask questions or something like that. Maybe we'll do an Instagram live or something like that if you're open to
Love it. Yeah.
Okay, great.
Thanks, Shake. It was nice to meet you.
It was nice to meet you. Enjoy Southern California for the both of us. And for all the listeners out there, thank you for tuning in to another episode of Life is Blurry. We'll see you next time.